Hello, today is the 18th of January 2025. As always, we'll start with our disclaimer. We'll go over our calls and then make our predictions. This is my trading plan for Tuesday as the market's closed on Monday. Tuesday will be January 21st, 2025. Remember, this is a plan I have. My plan can change. My plan can be wrong, and any trade you make should be made at your own risk. Pays to remind people that the MEJT system gives targets, it doesn't give entries, doesn't give exits. Friday's pattern was a pattern with the early high, which is this, and Tuesday when the market reopens, we're going to have the same pattern, a pattern with the early high. This is a review of what we said. We had mixed signals rules. The commonest thing is a gap and prompt move outside the day's range. We got that. We said bulls needed to gap over Thursday's high, maintain the gap to keep the rally going. And if they do that, the pattern still has the potential to rally in a straight line to a new all-time high. We'll see how the action on Friday has influenced that. These are the patterns we should see next week. We had a target, 59, 55, 28. Because of this weakness here, I thought it might not print, but it did. We have a new target, 6,014.20. This is actually weak action if it's maintained. So once again, might not work. But if we don't gap down smartly, that's what the rules call for. Don't forget, when you're near a major change in trend, these things can fail to print in their preferred time frames. We had an ultimate sell signal in the morning. That's low enough to satisfy the signal. We now say from MEJT this drop isn't going to stick, gives us the target 6,014.20. Well, let's go over the longer term picture first. We had this head and shoulders consolidation. We called this as a false break, although I missed the price. I was off by about 16.5 points, which is too much for me to take any credit. But I said, when you have a head and shoulders consolidation that breaks falsely, the target is to rally up in a straight line. And so far that's playing out. Now the target of this pattern is to rally in a straight line over this high. And based on factors other than the pattern, I thought we'd continue higher over this high. But this pattern, if it plays out the way it usually does, we're going to rally in a straight line past this high. But again, it just doesn't always work, and we're running into another roadblock here. Now we have a gap up over this trend line, which is a valid break, but it needs confirmation. And confirmation is continuing past Friday's close by at least 1 cent. So if we gap down, this break doesn't count. And we won't know that until the open on Tuesday. We have a new pattern in addition to that false break of the head and shoulders consolidation. We now have a wall with gap pattern. Here's your wall, here's your gap. It's an unstable pattern. This fills, and the vast majority of the time it's going to fill by Wednesday's open. Now, if it doesn't fill by Wednesday's open, and usually during the day on Tuesday, it doesn't have to fill anytime soon, but this does fill at some time. So that's conflicting with the pattern we showed in the last chart. We also have gapped up, hit higher highs, and closed under all these highs, and that's -2. Now again, the open on Tuesday can substitute for this close. So if we open up here, all that negativity goes away, and we certainly accomplish that at Friday's open. So it's possible to do. We don't know that until the open. But for right now, that's a negative pattern. Let's take a look at the wave count. Well, we had this A and we had this B and C for green A. It's possible to count this as A, B, C with good fibs, A, B, C with good fibs, and then C would be equal to A. I mean, it's possible to count this as a completed wave. And if that is the end of wave green B, green C, if it's equal to green A, could still take us into the 5600s. I mean, if that's light green A and that's light green B, I mean, these things work perfectly. I mean, that's a valid count. Doesn't mean some other count isn't valid, but I can count this as being over. And the fact that we have this wall with gap pattern and the negative close makes me very leery. I don't know if we're going to continue to the usual target or not. We'll know that, I think, at the open. So we have to use the mixed signals rules once again. Tuesday's pattern has the early high regardless of where we open. Typically it's a rally day with a high in the final hour, and if you fail, it's a straight line drop. Now Friday's pattern neither rallied to a final hour high nor had a straight line drop. Time runs out at Tuesday's open. So we should either gap up and overtake the high of day or have a straight line drop. Now we have mixed signals again. Now it's bullish. We gapped over that red trend line. This needs confirmation by continuing higher Tuesday. So if we gap down, that break doesn't count. It also is bullish, rallying into a lunchtime high in Friday's pattern nearly always follows through with that high being surpassed. And there's also a higher MEJT target. Unless we gap down smartly, the rules call for it to print. So there are bullish influences here, but it's quite bearish that we gapped up, hit a higher high, but closed under intraday highs. There's a wave count saying the rally's over. There's a timing indicator of a friend of mine compatible with a high here. There's a proprietary indicator of David who posts on this channel periodically, and that argues against gapping up, and his indicators are pretty good. The wall with gaps should fill, usually within a day or so. All bulls need to do to bring the false break of the head and shoulders consolidation to its usual conclusion, usual, not guaranteed, is to gap, preferably up, overtake Friday's high and add to the gain. That's possible. I think it's going to be difficult to do. We won't know for sure till the open, but if we don't do that, then we could well be headed lower again. So once again, the bulls have to prove their case. They have a number of bullish things going on, but this is a logical place for the rally to end. And if they are going to take us higher to those usual targets, they're going to have to get their act together and gap preferably up and overtake this on Tuesday. And if they can do that, I think all systems will go. And it is a usually bullish day, and usually you're going to continue up. But if that fails, when you get signals which fail, they usually fail in grand style. And if this does hold, if that rally doesn't happen, and I'm just not certain it will, I can justify this rally being over. And that's today's call.